Beginning of August, we called this bottom on Nvidia and most of the market because we knew that we were pulling back into an institutional buy zone. The reason for this is if we go out to the weekly chart, this is exactly where our weekly market bias is sitting. As you can see, in most cases, when price is trading above the market bias and we accumulate shares around it, it is a solid institutional level that usually we will bounce at. And so in this case, we expected price to bounce off of that level. Now, when looking at any chart, there's three major things we're trying to look at. What is the overall trend? We know that this is bullish. We just looked at the weekly market bias. The second thing that we're looking at is what is the mode? Are we contracting? Are we expanding? Are we in a capitulation where the stock is selling off? And you can see that this was our impulse or our expansion, this major breakout basically from May up until the end of June. And this isolated area from July and now into August was our contraction mode. And usually when we're contracting back into a support level, our institutional buy zone is going to be the 0.618 and the 0.786 level. The third thing that we watch for is bullish accumulation. We want to see that money is actually stepping in at the institutional buy level. You can see that the day it hit that institutional buy level, we opened the session at $91.67, and it pushed from low to high up 10%, closing the session over $100. That right there is a strong indication that institutional money is going to step in. But even if we just wait an extra day, price retraces and closes with higher lows on the BX. If we even wait another day, price pulls back, holds the BX trender, and we get confirmation of a higher low the very next day. When we see higher lows on the BX trender, it's showing that money is actually coming into this and that we should see a further breakout. This now followed by the current week we continue to make higher highs on the BX trender, pushing up into our market bias. Now, my plan was to be bullish on semiconductors while we continue to push up into market bias. This is why we took ARM calls, which we made $90,000 on, but instead of holding them like I probably should have and waited for the continuation and waited for some sign of weakness, I instead decided to enter preemptively, which is okay. I would take this position each and every single time. My plan was to set a stop loss if we closed over this most recent high here of $125. My take profit was going to be down first at $100 and then down at the smart money level, which is usually where we'll test one more time, of about $90. This would have given me a 3.67 risk versus reward. And while this trade did not play out, a 3-to-1 risk versus reward with a 64% win rate is very, very potent. Now, the reason I close this out, even though there is a chance that we could reject within this level, is mainly because of the weekly chart. If we pull back out to the weekly, you're going to notice that if we're trading over market bias and we close with a higher low on the BX trender, in most cases, it confirms that we're going to get a significant rally for the coming weeks. In theory, I could have probably held one more week, but with the strong confirmation like this, I decided that it would be best for me to close out my position. Lost $20,000 on the trade. Sucks, but at the end of the day, trades like this are going to happen. I would have taken this each and every single time, and you have to understand that when we have short-term sentiment shifts, this is when we're going to take our losses. It's really when we're in a massive impulse that we're going to do very well because there's no resistance levels to the upside. But when we're stuck between the daily and the weekly market bias, as we are here, it is a very tough time to trade because we're not quite bullish, but we're also not bearish on the longer time frame. This is why, for those of you who are veterans or have more capital, I like to sell cash secured puts within this range because this way I'm going to make money off theta decay. It's going to be a lot easier for me to look for consistency within my trading. And then once we get either the break of the weekly market bias and the long-term trend shifts, then we go into bear mode. However, if we bounce like we have now and confirm that high, then we can go back into bull mode. So now to end this thing, am I going to go bullish on Nvidia? Well, potentially. I really need to see price reject off of this level first, pull back down to 115 or 112 and test the daily market bias while still showing on the weekly market bias bullish accumulation. Be extremely important, and I'll continue to monitor this with you guys each and every single day next week. If you guys want to learn the exact strategy that we use here, it's 2 steps. It's very simple. All of our courses are completely free. The link to them will be in the description of this video. The $600,000 strategy, which is the, now it's like actually up to 1.3, and we were all the way up at about 1.5 before taking a sizable hit. that is actually the same exact strategy that we're using here. It's just using market bias. We integrate the BX trender. It is very simple. All it requires is 30 minutes a day from 3:30 to 4 p.m. since we're working with daily candles, and all of that content in those courses are completely free down in the description. And if you do want to trade with me, get access to all my trades real time, and most importantly, learn alongside people and a strong community who are trading the same exact system as you. So there's no, oh, where's my stop loss? Like everyone knows what they're doing. The link to our private academy is down in the description. Thank you guys for all support. I'll see you next time.